traders, what's going on? It's March 7th, 2019. We're going to do a quick market update. We're going to talk about how you could have implemented some very simple trades this week, utilizing some of the information that we have been posting on this channel in the last couple of weeks. And I had multiple questions about the Tesla trade, so we're going to show you, give you some answers, and try to show you just a couple of live trades that were placed utilizing some of the information that was disclosed to you in the video posted on Monday. So here it is. First and foremost, let's talk about the markets, right? We've been talking quite a bit over the last few weeks about the market reversal, that it's coming, and pointing multiple different factors. If you've not watched those videos, there should be a link at the end of this one if you want to review all the specifics. For the purpose of this video, I'm just going to mention a couple of things. Okay, so we've been talking about the coming reversal. We've been noticing some things developing on the chart. Now, sometimes these market topping situations, okay, they do take a little bit of time. So, but you have to be on the lookout. Basically, the main purpose of the last few videos was to tell you, okay, the risk reward now is in favor of bears. So you want to position yourself properly to take advantage, taking profits, and really trading the market on the put side. Here's some observations worldwide, right? So first we're going to glance at Japan. As you can see, a very similar chart pattern that resembles a lot, actually, the S&P 500 here in the United States. And for whatever reason, the correlation between Japanese futures and the United States have been absolutely incredible. I actually don't remember in the history of markets where this correlation has been so stunning, meaning the S&P 500 futures have been exactly resembling down to literally even a percentage change of what Nikkei futures have been doing overnight, pre-market, after-market, and so on. So this correlation has been extremely positive. That's why we're taking a look at Japan to kind of see what could be coming next, right? So here's your black candle. We've talked a lot about black candle reversals, and interestingly, look at this. We get the black candle, we get 3 days lower. Also coincides with this bearish crossover on the MACD. So what are we saying? Well, it looks like the Nikkei index is really having a hard time breaking above this orange line. So from here on, it could be easily falling back to this level of 20,700, maybe 20,500. So that's what's going on in Japan. We take a look at Hong Kong. Okay, clearly we've got very similar situation, not as far as the black candles, but we're observing some signs of the top as well. We've got some divergences going on in RSI where it hits a new high, but the RSI doesn't follow. So therefore, we're expecting a big reversal. Like markets on Hong Kong could reverse significantly any moment. Despite of this bullish development right here and the bullish crossover development, we can easily revisit maybe a couple of thousand points lower, maybe to this 27,750 level. Also coincides on this MACD with a bearish crossover. Let's take a look at Germany. Same thing, right? These are all top informations which we have been expecting over the course of the last couple of weeks. Same observation, right? Bearish crossover here, top information here, and things are just about beginning to roll lower, and I'll show you exactly how you could have utilized these observations to actually place some real trades. So here's VIX, right? At the same time that these indices, they are finally giving in after really showing us a clear top formation. We're seeing VIX is finally spiking, breaking above this critical level. And last time it breached over 16 just a couple of days ago. It didn't stay there, like it came back down. But now we've got a double bottom right here in the VIX, and it is breaking out higher. So chances are what these blue lines mean, we're going to see a VIX between 20 and 22. Now, we've actually known this when VIX was right here at 14.15. I'll show you how. By the way, this strength acceleration in the RSI and the VIX probably going to get us back to another point like this. So if we were to review the VIX chart, let's say within the next 10 days, we're probably going to see another area where VIX, RSI and the VIX is going to resemble one of these situations, and that's probably going to happen right around the time VIX is going to hit 2022 in the next 10 days. Very bullish crossover on the MACD on the VIX here. So S&P target is still 2650. If you've been following some of the videos we've posted in the last couple of weeks, we basically made a case that S&P, that literally that stocks are not going to go and reach their all-time highs. And part of the reasoning behind it, besides all the observations of the chart, was we had that multiple divergences developing. We had multiple divergences developing between the VIX and the indices overall, between some core key names like Amazon and some of the FANG stocks, where they're not getting traction. They're still down 15%. 20% on average from all-time highs, while the market overall is back getting very close to the all-time highs, right? So we noticed multiple divergences, and every day we've been following the market. Basically, these divergences kept confirming and confirming and confirming their case, and now we're finally getting what we've been expecting. So S&P can easily retrace back to this. It's interesting that this level right here, 2666, this been, now it sounds like a weird number, 2666. We've been paying attention to this number since May. That's been a really interesting number. This has been sort of like a magnet. The market just been glued on S&P 500 to that number. Every time it was trying to break above that, it would get back to that 2666. In May, when the markets were finally starting to get positive, we finally broke above that, had multiple times where we retraced back to that number. So watch this number, because we may not essentially hit 2650. We may actually get stopped right here at 2660. We may dip to 2650 and maybe jump back over this 2666. But keep paying attention to this number. This is a very important number, besides, that it looks like the 666 and there's a 2 in front of it. But pay very close attention to this. This is going to help you put some good trades together. Same thing, right? The MACD, and we're noticing divergence in accumulation distribution as the market tries to go higher. NASDAQ got some really cool stuff going on here. 7,000 to 7,100 on the VIX should be, on the NASDAQ should be no problem here. We're noticing the last few days the volume is actually spiking, so we're seeing more institutional investors coming in, taking their positions out. So easy drop, another 400 or 500 points here on NASDAQ. So got plenty of room to stay with our put positions here. Now, guys, when we're talking about these drop in S&P to 2650 and NASDAQ 400 or 500 points from here lower, we don't mean that it's just going to happen all in straight line. And I'd like to make a point throughout this video that when you're shorting stocks, I think the most common mistake that people are making is they don't actually open their positions until they clearly see that things are falling. Guys, that is just no, that's how you can actually lose money, because what you're doing is you keep staring at your screen until the point where things just look beyond any sort of reasoning or of denial. When you clearly see that the markets are dropping, that's when most of the people start to buy puts. That's not a good strategy. If you use this strategy, you're going to end up paying a ton of money to buy your put contracts, because they're going to carry a ton of premium when it becomes clear to everybody that things are dropping. So that's not a good strategy. You're going to end up paying a lot. If the market reverses, bounces, you're going to be freaking out. You're going to close your position at a loss. So what you want to do, you want to pick the intraday highs to short your stuff. If you're trying to build your put position, you want to wait till markets bounce. That's when you want to buy puts, because you're going to be able to get them at a better price. Let me walk you through this Amazon trade. Okay, so the Amazon trade, right? On Monday, Amazon was doing what? Look at all this green stuff right here. It gapped up higher, moved higher again. Look at this beautiful thing right here. It hits a high of 1709.43. This is about the time when we send out the alert, Monday, the 4th of March, when the markets are looking good, when everything is flashing green, we say short Amazon. Now, if you haven't been following some of the stuff, what's been happening in the market, I found it very interesting. I wish I had more time to share stuff with you guys like this, but that's why we have the subscription service, to where you can get that extra information that could give you an edge. So the bottom line is this: the cloud stocks, which have been institutional investors' favorite for the last few years, right? We're finally seeing they're hitting some really high levels, and at these levels, they're taking money out of these stocks, despite of whether they're announcing great earnings or not. So great earnings from cloud stocks is sort of to be expected. No big deal, right? So you have cloud stocks like CRM, Workday. These guys, have doubled, tripled, quadrupled over the last couple of years. And, I remember when CRM was like a $30, $40 stock. It's now around 160. But what did it do after the earnings announcement, right? Great earnings, boom, it drops. So we're seeing that institutional investors are taking money out of the cloud stocks. as many believe that Amazon is actually a retail stock. That is not truly the case, because the only segment of Amazon where they're making money is the cloud business. So when you're noticing that all of this money is moving out of the cloud stocks, that tells you that they were about to start taking money out of Amazon. So when you combine the charts and a little bit of such information, you would have been able to, really place this easy trade, including all of our observation of the market over the last couple of weeks. And if you, for some reason, you're new and maybe some of these observations are not as clear to you and you're not sure how to put them together, that's why we have the alert service where you guys can get alerted. So a lot of times, I'm getting blamed like, oh, well, Leonardo, you're only posting your best trades or whatever. No, guys, I clearly posted a couple of bad trades like AZO. Okay, yeah, I didn't get the magnitude of the move right or the target levels. Okay, that video is there. But if you executed correctly on it, the way I showed in the live trading video, you would have made money. So once we do these calculations, guys, just stick to them. So I'm not going to go for all the calculations, but the point is this: if you're not sure how to implement and how to execute, okay, just do this. Okay, you could have easily signed up for these VIP service. So this is what we're saying Monday. When everything was green and everything was higher, what did we send out? Right, I posted the video about Tesla, but Tesla did not end up being the ultimate best trade of the week. It was actually Amazon and a couple of other stocks like BABA. We sent out some alerts on BABA yesterday when it was 185, and it dropped basically today to a level like $7-8. So those made like incredible amount. I mean, we were buying them for like $1, selling them for about $5. Actually, no, I was buying mine for like 80 cents, selling them for $5. So really nice returns on BABA trade and Amazon trade. So Tesla, I'll show you a live video at the end of this video. Like, yeah, it made great money, like double, triple, but it wasn't the best trade. So, and guys, I try to post everything, the good trades, the bad trades. You can see it all. But here's how you could have easily implemented this, right? So buy puts, and that was sent out on Monday at 11:17 in the morning when Amazon was rocketing higher. So that's how you want to execute your puts. You don't want to wait till everything is dropping. You want to buy puts when something is going higher, but you've done your calculations. So the charts of Amazon clearly show, like every time it gets to 1705, it has such a strong resistance level. It just makes sense. Plus, when other indicators, if you were to take our charts divergences course, there were so many divergences on the chart just screaming, short me now, okay? And so we did. Also, we send out an alert saying, hey, start building big position in VIX calls. At the time, VIX was trading about 14, 15. When we sent that, we said buy 15, 17, and 20 strike VIX calls. That was Monday. So what was actually happening Monday, as you can see, as far as the chart concerned? Well, Monday, nobody was thinking about shorting a damn thing, because why? Well, look, Monday, this is how pretty much the market looked. Everything was in the green, everything was going higher. But this is exactly when we were buying the put contracts. So what happens next? Well, here's Tuesday, right? Here's the action from Tuesday. And it doesn't look like anything is happening. So you guys, you have to have some patience when you're trading. Know why you're getting in the position and know what would be the reason for you to get out of the position. And I'm going to give you some very specific example, like how would you know when you should have gotten out of the Tesla trade or stayed in it and so on, here shortly. But let's just focus on this Amazon trade real quick. Okay, so Monday we send in the alerts, short it while it's actually going higher. We say start buying VIX calls while VIX is actually dropping. Monday we send again, later that day, buy VIX calls, a ton of them at 12:58. We're starting to notice in the Amazon, besides everything else, is developing a black reversal candle. And that basically makes us send the next message is add more puts. Now that was later, so 1 o'clock, buy more puts. 2:35 p.m., buy more puts. Amazon, Tesla was trading at 284.5 at that time. VIX calls were at 1502. That is Monday. Okay, so here's what happens Tuesday. Guess what? Nothing freaking happens, okay? But guess what? What do we say? Oh, no, let us close the position. It looks like the market is just going to keep moving higher. No. Guys, we have this 13 markets move formula. If you don't know it, learn it. It's going to make your life as a trader much easier. Just click the links below this video and just sign up, okay? But the bottom line is, sometimes when you do your calculations, they're not going to be precise. They're not going to be like 100% perfect. But depending on how you execute and you manage your trades, okay, will determine whether you will make money or not. So here comes Tuesday. What do? And Tuesday, guys, I mean, for a lot of traders I know that opened their trades on Amazon, you know, what were they doing? They were freaking out. It looked like the market on Amazon were starting to climb higher again on Tuesday. What did they do? Instead of adding to the position, they jumped out. So what we were saying, though, in the alerts, we said, look, guys, Amazon 16, 19, 1700 strike puts, add more. Current price of Amazon at the time was 1700, and our target on it was 1620. So we typically do our targets. It means like by the end of the week it will be 1620, which actually hit that level today on the 7th. So within 3 days we did hit that level, but notice that was on Tuesday. So if you were signed up for the alert service, you said, oh no, I'm scared to get into Amazon puts because it looks like it's going to go to the moon. Okay, you could have still done it on Tuesday, as you can see clearly here. Also, we send you some observations on the market moves and like what's going to happen and stuff like that. We're also recommended Google puts here. Now, here's what happens Wednesday. So for 2 days, we have to accumulate our position to finally make a bunch of money on Wednesday. Now, Wednesday, what do? Most of the traders, okay, if you were to get in the position here, what would you be doing here? Most of you guys, I mean, that's the reality. I talk to most of you every day, and what do I hear? Oh, I'm happy if I make 500 bucks. Oh, I'm happy if this, you know, if I can just lock in a couple thousand. No, you could have made a killing. So what did we say Wednesday? Did we say close out your positions? Did we say jump out? No, we said this. On Wednesday, close your eyes. We didn't say close your positions. We said close your eyes and buy more puts. Load up. We're near the drop-off. So that was Wednesday. Okay, and also notice the Amazon is hitting the lows of the day. The rest of the stocks are to follow. Short the hell out of Amazon. So we weren't locking in gains. We knew that that was just the beginning of the move. We're not yet at our target price yet. So, but the point is this. If you look at this, what happens next? What happens the next day, guys? Well, what happens is, you know, Amazon drops to 1620, hits our target price, and, you know, off the market, it keeps trending lower. So the bottom line is this. This is the point I'm trying to illustrate. You got to study the chart. So you first have to understand what the hell is going on in the chart, why you want a short thing right here while it looks like it's going higher. You certainly don't want to be doing this, right? So it might even apply to some of our alert subscribers. Maybe you were getting this alert right here and you didn't do anything. Maybe you got it here and you didn't do anything. Maybe here you started thinking about it and guess what? Now you're getting in here. Well, getting in here right now is just too damn late, okay? The stock already dropped 80 bucks, almost 100 bucks at this point. Do you really want to get in? But that is unfortunately the main mistake that everybody makes. You only want to pull the trigger when just things look like they're about to crash. Otherwise, if you look at stuff and it looks like it's going higher, nobody wants to short it. Which means if you're doing that, you're missing out on some of the best opportunity to buy puts because you buy puts at a cheap price when something is actually going higher. So guys, if you're finding yourself in situations like this, you definitely need to understand a little bit more how charts work. You know, starting with understanding the patterns, the divergences. Got a 6-hour course on that will help you do that so you don't catch the moves at the very bottom. And that moves me to the next question. The Q&A on Tesla was such that, you know, I've gotten some comments. I posted the video before this gap down actually happened. And I've had comments like people made money. Oh yeah, I jumped in. But those people that just kept looking at this thing drop and got in when it was, let's say, hitting 270 level, guess what? If you were getting in right here at 270 after you watched the stock drop already 14, 15 bucks, if you were getting in here at the lows of the day, you weren't making money because the next thing it jumps back to 275 and it kind of stays there for a couple of days. And I know a bunch of traders got kicked out of the positions. Why? Because you see the candles, like it keeps going back to this 284, 285 level. So what do? How do you manage a trade like that? How do you actually handle it? Well, in the video describing the Tesla trade, I've compared the environment right here exactly to the environment that was taking place here. And I did that before this gap down happened. So even though this gap is more dramatic right here, but you can see this is a gap. This stock closed right here. The next day it opened significantly lower. This is exactly what we've gotten right here. The point is this. Once you have a major gap down like this, or a major gap down like this, now the reason I say major is not because of this distance between this candle and this candle. You want to look at the volume. If the gap down happens on major volume like this, as you can see, this is one of the biggest volumes on this chart. Okay, when the gap down was happening here, the volume was actually all the way here. So when gap downs happen in huge volume, that tells you that the number of sellers were outnumbering the number of buyers by a large extent. And so this gap typically is going to be very hard to close. So the ultimate question I've been asking, okay, how do I know? Because every time it goes back to this 284, 285, I freak out. I want to close out my position. I want to get out. Guys, please understand that as long as this gap down, which is a very bearish sign, as long as it's not closed, every time the stock gets right here, what do you want to do? You don't want to jump out of your position. You want to do exactly the opposite. You want to buy puts. Buy puts. That's just the bottom line. So the only time, okay, you should be getting concerned, I put this number 287. That's your magic number in Tesla. If it jumps above 287, on strong volume, you want to get out. But that means if you're getting in your position around 284, 285, if it jumps above 287, okay, you're not going to lose a bunch of money. Yeah, you're going to take a small hit, but that's fine. I mean, this is a very well calculated trade. Now, the problem is this. If you're getting right here at 270 and you're riding it all the way back right here to 284, 285, yeah, that's going to be very painful. So your number one goal as a trader, if you're trying to make money when stocks fall, is to make sure that you're getting in stuff at the right time. And if you have no idea when is the right time, then you got to get some more information. You got to understand the divergences. You got to understand how to read these charts. Because again, that's going to help you stay and become more profitable. So simple trade, guys. Every time it gets to 285, 284, short it. If it gets above 287, close your position. It's that simple, okay? So now I don't have the picture of this intraday, but how would you have known that this was the time to possibly close your position? Well, if you're looking, right now we're looking at a longer time frame chart, but if you were running 1 day, 1 minute chart, if you're a day trader, swing trader, you would have noticed that actually Tesla made a double bottom here at that point. So if you've taken our courses, you know we never recommend selling the entire position all at once. So you would have been able to sell half of your position, lock the gains here, okay, and your trade would have gone much, much more successfully. So you're not sure how to execute situations like that to keep the money in your pocket, guys. Look, just click the links below, take the courses so you can become a better trader. And here's some fragments of the live trades that we were placing on Tesla as we were explaining the trade to you guys at the same time. So here it is. Check it out. Overall, guys, this market is absolutely amazing right now. The VIX is about to spike. We're going to see some volatility. This is the time to be making money. So if you're not sure what the heck you're doing, okay, again, take action now. Click the link below this video. Get more information. Get educated so you can make this year your best trading year ever. I'll see you guys in the next video. Hey guys, March 4th, 2019, and the reversal that we've been talking about on the channel for the last couple of weeks is kind of finally coming to fruition. The market is experiencing a first day down on significant volume after going consecutively higher on very insignificant volume. Typically, when that situation happens, we can expect the market to continue selling off from here. Some of the recent trades that we have taken was the AZO puts, the Amazon puts. Actually, the alert went out this morning when everything was in the green, right? Because when the market opened up, it was like plus 15, 20 points on S&P 500. Pre-market, everything looked green across the board. The NASDAQ, Dow, everything was nicely in the green. And then classic move 2 from our 13 markets move formula happens. Now, we were expecting this in the sequence, so we sent our alert subscribers to buy Tesla puts this morning when it was trading at these 297, 298 level. So those are actually producing some good results. To show you specifically, so this is what I was doing today. I was buying 3 Tesla puts right here that expire in 11 days. Those are making $1,900. 10 Tesla puts making about $5,150 here. 39 more puts and another one making another $1,800. We believe Tesla is going to drop easily to 252, possibly 249 in the next 72 hours. Some of the other trades that were recommended on the channel earlier, a few days ago, when AZO was going higher, significantly higher, right? We suggested to short it. For those that even bought the puts before that, I mean, guys, this trade at this point is highly profitable if you jumped in utilizing specifically what we have described. And in this video, guys, the goal of this video is to show you how to turn basically 24K. As you can see, the account right now is at 24K. It was earlier at 13, but as you can see, 14. It was earlier at 14K. Now it's at 24K. So since we sent the alerts to the account, basically it hasn't doubled yet, but in the last hour, it made about $9,033 here. So far, again, we're invested in the Tesla trade. I just showed you how many we have. You can see the cost right here, what we're buying them for. So we're buying 3 at 12.46. Now they're worth 18.7. We're buying 10 of these 290 puts at 5.20. Now they're worth 10.27. I'm buying 39 of these 265 puts at average cost of 1.52. They're worth 195 now. And one tiny little one right here at a cost of 154. It's currently worth 165. So here's what we've got. We're going to keep track of these trades, and over the next 72 hours, we're likely to take some other trades. Of course, the safest way to do it is to buy in the money. So I've got some, as you can see, that are in the money. They were not in the money this morning when Tesla was at 298, but now it's at 285. So now I'm in the money on these, These are still out of the money, and these are out of the money right here. And look, yeah, another trade we suggested was VIX calls. And we did that. We sent out the alert when VIX was at 14, suggesting to buy 15 strike calls on the VIX, 17 strike calls, and 20 strike calls on the VIX. Okay, guys, and here it is. It is officially March 5th, 2019. Tesla gapped down a little bit, trying to stage a rally. As you can see now, the account is starting to move in the right direction, 28.8, 28.950. We are about 1 minute into the market open, and here it is. Tesla is breaking through a critical level of 280, which was super important. We mentioned that yesterday, how important it was for Tesla to actually drop below this 280, because now that it has done so, the volume should accelerate. Look at this volume, how quickly the sell-off volume is coming in right now, right? So we opened pre-market, Tesla traded about 300,000 as far as volume. So basically 500,000 shares exchanged hands within 2 minutes after market opens. This is pretty good volume acceleration. I think pretty soon we're going to be here at a couple of million in volume, I would say in the next 10 minutes. So very important that we keep staying, however, under this 280 level. I don't like when the stocks slightly drop below, and sometimes they bounce out of that. Based off the volume, another 50,000 shares coming in here. So based off the volume, I think this trend lower is going to persist throughout the day. But clearly we're not here for just a few dollar drop. The stock is dropping $5 since yesterday. We're here for a much bigger drop. As long as the volume keeps accelerating on the sell side, we should be good to go. Just give it a couple more minutes, guys. There it is, 279.57. As long as we stay under 280 for about 5 minutes and we're not bouncing above the 280, there's a really high probability we're fixing to drop literally $3, $4, $5 extra any given moment now. Here's Tesla. Let me try to maybe bring it. Okay, so this is where we're closing. Okay, there it is. The break lower is coming. There it is. So 278.34, 277. Okay, and as it's making the drop, I mean, you can make observations right here if you'd like in this left corner, left upper corner right here. So we're at 32.482. Okay, feels like another break lower is going to come. We should be pretty close here if this volume keeps coming in. So let's check the volume again, right? So since yesterday, we're making 17K in this trade. As you can see, the positions are still the same. We didn't change anything. We owned these 3 contracts here, 10 contracts here, 39 and 1, all different strikes, different expirations. And the volume is at 1,176,000, 1,181,000. Want to see this volume keep accelerating as the stock drops. Come on. I think we're going to get pretty soon to this 272 range, which is another kind of important level. And I know these levels just from trading these stocks for so often throughout many years. And the next level, the next stop is going to be 272, 273. That's what we should be able to see. As you can see, the low of the day was just set on accelerating volume, which is the key right here, 1,326,000. You can see the numbers keep moving higher here. Now at that 276 range, pretty soon we're going to be at 273. Should see 275 here shortly. Okay, we're at 37.8. All right, we'll do a quick review, guys, in just a few minutes here. Okay, guys, so 20 minutes later, setting the low of the day, 273. Here it is, up 29K. The account is at 44,540. We'll do another follow-up shortly. Oh, here how it looks on the chart, right? So there it is. Makes an attempt in the morning to go higher after it gaps lower. Fails to close the gap. Boom. Classic. Just, guys, this is classic example of a move 3 type situation. If you're not sure what move 3 is, guys, click the link below. Take the 13 markets move formula so you would know exactly how to take trades like this one.